Hey guys, just wanted to make a quick video about scaling and kind of what my plan is, why I'm doing it, and why it's important. So, um, I guess if you think about it, there is just many different ways to. I guess it depends really on how much you have. So even I guess no, let me rephrase that. I think even if you have a lot, I still think you need to have some type of scaling plan. Especially if the instrument that you're trading is the minimum tick size or the minimum profit loss ratio is too large for your account. So let's kind of go over what my thoughts are. And right now, in terms of development of the strategy using Polarity ATI, I think I am okay. There is some kind of updates on it. One of the things I wanted to do was do a profit trail specifically programmed into Polarity ATI through the ATM strategy. But just after reaching out on the forums, it looks like that is not possible without an immense amount of research and development to do. And I don't know if that's something I'm going to do or if that's something I want to put on the back burner or maybe just eventually develop my own strategy. Because I do believe there is a considerable difference using a trailing profit with your strategies, and especially on a really short time frame, like where you're not really looking for runners, you're just looking for kind of like the actualization of a pattern, or in this case, a triple stack imbalance. You're kind of just looking for that, right? And that's where the trailing profits really do help a lot, in my opinion. But the other problem with what I'm doing in terms of mirroring the trades, and I think that's something that I kind of improved on. So what I did was I actually removed all the noise, all the voices in NinjaTrader. And I'm hoping this will speed up the kind of like, when the position pops up in NinjaTrader. So I think what I saw before was like when Polarity ATI and NinjaTrader gets into a trade, NinjaTrader goes like before the red or the green position indicator is changed. It goes, the voices go order filled, or no, sorry, it goes order submitted, order filled. So there's a delay there, I think, before it actually shows up, and that kind of messes things up a little bit because that delay does affect the results, mirroring the trade results. And so what I did, and also like for when take profits and stop losses goes, target filled or stop filled, whatever it does. So I think there is a delay there. Obviously, there's no delay in the background of your trading. It's just that there's a delay when it shows the indication on the screen, which is what I'm keying off of using the auto hotkey scripting. Okay, so anyway, so that's one thing. So I've eliminated those, and I believe it right now in the replay it does seem to run a little faster. So I'm hoping that does improve the kind of the performance of the mirror trading. Yeah, so that's what I was doing this weekend. I was hoping actually to do the programming the profit trail, because I think that is eventually what's going to be needed to do full integration. Just obviously no mirror trading, and just only in ES or MES or whatever. So anyway, so let's talk about scaling and why it is important, or size scaling. So as you might know, ES is 10 micro ES and 1,000 SPY. So right now, 1,000 SPY is like 40 some $1,000, something like that. Wait, sorry, it's 400,000 something dollars, whatever. 412,000, I think it is at the moment. So that's quite a lot, and you might not be able to, if you're using have $1,000 futures account, or even maybe even less than that. That's you could literally kind of go below margin balance or equity or whatever collateral balance for an ES pretty much in one or two trades, depending on what your tick size is, or in terms of what your profit and loss tick sizes are. And that's a problem, especially when you're starting a new system and maybe you don't have it fully tested. And even if you have fully tested, there's a difference between simulation and testing. Obviously there's emotions involved it's between simulation and actual trading. There's emotions involved. You might close stuff early. You might get freaked out and not keep implementing the strategy after a loss or something like that. Things like, or you might cut a profit early. Stuff like that that comes in. Or there might just be differences in the simulation and trading, which I do expect there to be. I'm hoping it is around 85%, 80 to 85% difference, obviously including commissions there. But so this was what I've been doing. So last week, Monday, I did 1 share, and then Tuesday, Wednesday, I did 2 shares, and then Thursday, I did 3. Friday, I did 4. So if you take a look at 1 share. 1 share is actually, let me do this as a percentage. 1 second. So 1 share is actually not even it's less than 1% of an ES. It's 0.00. I think it's gonna be like 0.1%. So I think a lot of people, you should be able to handle 0.1% of ES, right? It's 1 share of SPY. And, that might be what you need to stay on for a very long time until you feel consistently profitable with this strategy, right? If you do 1 ES right away and, you have 2 or 3 losing days, that could be your account. Maybe you just did 1 or 2 things wrong during that time that could be easily corrected, and but you don't have that opportunity again because you are obviously out of the game. So this is why I think is really important. And also, it's 1 share is very comfortable, and there's a line between comfortability and stress, and you need to keep pushing that line. Let me just. Alright, I'm sorry. I'm just gonna write something down. So, blah blah. Okay. Alright, I'll do it later. Okay. Oop. So there's a line between being comfortable and being stressed to the point where your decisions are starting to be skewed. And actually, let me just write it right up here. I think that'll be better. So, comfort versus stress. Okay, 1 second. Let's see if I can get this all on one. Sorry, 1 second. Let's see if I can get this all on one page. So, so there is a kind of fine line between comfort and stress, and I think that's where you need to, you kind of, in the beginning when you're learning the program, obviously, you need to have time to practice, and going live is different than simulation practice. So you need to kind of figure that out, right? So I'm still pretty comfortable in this. Obviously this range. I'm at today. When I did 4, I was at 4% of an MES and then 0.4% of the ES, right? So that's still within comfort, and I'm still kind of tweaking the system a little bit, getting it faster, getting it more consistent. Just being more comfortable and not looking at it or anything like that. So that's kind of the process of this. So next week this week I moved up by 1 share Next week, if everything goes well, I'm gonna move up by 2 shares. So 5 shares, and then 7, then 9, then 11, then 12. It's 13. So as you can see, I'm starting to come in closer and closer to the MES. Well, not that way, but next week will just be a week where I can kind of hone in on the specifics a little bit more. I'm still doing like testing of this trailing profit and putting it in either anti-trend or anti-regression or something like that, depending on how the day looks. So and also seeing like how seemingly things that are break even on, like, actually I think I need to put in another column here that, okay, never mind. I'll do that later. Anyway, that's a different thing. I was thinking about showing what the actual profit and losses at these different levels, but that really just depends on what the tick size or what the profit and loss tick sizes are. But anyway, so that's kind of what the plan is for next week, and then if that goes well, then I'm gonna move up to 5 instead of 2. So 15, 20, 25, 30, and 35. And when I hit 35, I'll be pretty much a third of an MES. So that's good and bad. So, and then the following week will be 10, and at that, I think when I hit 85% or 75%, that's when I'll probably switch over to MES. Just do one contract size of MES. So let's just say it keeps going well, and then like in mid-May, I'll be at 1 MES, and then I'll be at 2, and then 3, and then 4, and then 5. And at that point, I just kind of need to reevaluate where everything is at the moment. Well, I mean, I'll be doing that all the time, but obviously, as I mentioned before, implementing a profit trail in Polarity ATI using the ATM strategy seems to be too difficult to do. So I might have to try something else or something like that, right? I think at the point where you get to close to one, ES, or maybe even 2 or 3 ES or micro ES, you really want things to be very tight as possible. Right now it's not tight because I'm obviously mirroring the trades, and the SPY and the ES, they don't always 100% correlate in terms of what's profitable and what's not profitable. For example, if you get one, let's just say you have a quote unquote break even slightly positive trade of a +1 tick or something on the ES, that might actually be a loss in the SPY, though it shows up in the sim as a 1 tick profit, or maybe even 2 ticks might be break even or like a small loss in SPY. It really just depends on what the fills are, and so it doesn't translate 100%. Yeah, and also I'm getting in by market in the SPY, in and out using, or sorry, not market, but I'm using marketable limit orders pretty much. So yeah, so that's it might not translate 100%. And so anyway, this is kind of what the plan is, and again, it is just for me to get over the comfort versus stress dynamic that happens with pretty much everything, I think. So I think I don't want to say this about everyone, but one of the really big challenges is that initial plunge into trading, and you really like to have. I think you definitely need to do your research before you go live. And when you do go live, this is my thought on it. You need to really play with this comfort versus stress dynamic. So it's like you don't want to. Okay. 1 share is obviously, sorry, excuse me, one share is definitely comfortable. Excuse me. But if I were to start with 20 shares, that might not be comfortable. That's not comfortable, especially if I don't really not really confident in everything. Even though some of the testing looked good, might not be comfortable. Might be really good with that. It might be a little bit too stressful. Um, so so you kind of need to play with it. If maybe if someone else would start with 10 shares and then work their way up, or like that, or 5 shares or whatever, or maybe even they'll do start with one MES or something like that, right? It's kind of all depends on what they feel comfortable with, and what in terms of the actual trading. Um, so yeah, so that's kind of what my thoughts on that are. I think it is really important. If it's not important for you, you can just dive right in with one yes with a small thing, and you do well. That's really good for you. But I think for the majority of traders out there, especially new traders, I think this is really important. So I am manually, or sorry, I am automatically. So this is all automated. There's an auto clicker in the background that does this, that help me mirror the trades and get in and get out. You don't have to do that. Obviously, you can just manually do it. It might not be as easy as what I'm doing with the full automation or whatever, but you're gonna have to do it. Especially if you can't do one ES or one MES. Again, even with polarity, because it might not the signals that you get might not transfer over to MES. I think you probably get clearer, more direct signals with ES. It really depends. I haven't tried MES yet, so I can't really speak to that. But it looks like there might not be a direct translation between ES and MES. So you might have to mirror the trades. And in terms of like setting things up, obviously, I have a account with Interactive Brokers that's obviously over 25,000. So I'm able to day trade freely. But if you don't have 25,000, you're gonna have to use a cash account, and you're going to have to just stick um with one share or whatever, depending I guess if you have a cash account that is less than 1,000, okay, that would be really difficult actually. So, because that means you can only trade 2 SPY per day. That's actually not possible. So in that case, I would do something like using one of the 3x inverses, which is like either the XPXU, or what is the triple inverse for the bullish one? 1 second. So XPXU is at $13.32. UPRO. So UPRO is at $39.09. That's the 3x bull S&P 500, and SPXU is the inverse. So you can always, obviously, if you really are low, I would do the UPRO, and then so that's $39, and so if you have 1,000, that means you can do like 10 trades a day with that with one share. You obviously you can go lower. You can do like 3 or 4 trades, so you have a more stringent system. So that's what you have to do, I think, until you become comfortable with actually trading it with real money. And that would take time. That would take a lot of time. Seriously, that would actually take time. So, but that's something you have to do, because that will give you a much better chance of success than just simply taking that $1,000 and putting it into a futures account with NinjaTrader and just going blind turkey into it, right? So that's my thoughts on it. Obviously, everyone has their own opinions about paper trading and directly to full size trading, or different ways to scale up. This is kind of my plan of how to do this. If something goes wrong, I'm just gonna stick at that level. I'm gonna go one level down, just to size down, and until I figure it out, and then obviously once I figure it out, I'm gonna keep moving forward and keep building it up until I get to one ES, right? Which seems at this point somewhere hopefully middle of June, early June. We'll see. Anyway, I hope this was useful for any new traders. Again, there's you gotta really figure out what that line is between comfort versus stress. So comfort where, you follow the plan exactly. It's the one share obviously is not that important, right? Because that's like it's gonna be like $1 maybe a day, dollar up and down a day, depending on what you're doing, depending on your tick size. So that's not really that. That's not. So you should be able to follow the plan at that point. Um, with something like that, right? And then you gotta keep pushing yourself until you reach a point where you're kind of not following the plan. You're a little bit stressed. You want to cut things open a little bit, and then you stay at that point and build up confidence at that point until it becomes comfort again, and then you go to the next level, and then you keep kind of pushing yourself until and it takes time until you get to the point where it's not stressful anymore. You're at maybe one or two ES contract. It's not stressful, it's comfort, and you keep pushing yourself until you hit the limit of the trading, right? I think with what I'm doing with the scalping, I think the limit really is probably 10 contracts or 5 contracts, 5 to 10 contracts before you become too big and you affect those things a little bit too much in terms of scalping. Okay, all right, talk to you guys later.